Kroger announced their earnings before the market opened today, and the market really liked what they saw. The stock went up 7% in today's trading. That was a really good day for the stock. This is a grocery retailer, and they've been around for a long time. It's a very well operated company, and I really like how they communicate with stockholders. I truly feel like there's a partnership between stockholders and the company management team. Overall, Kroger has a good brand. They're very well known across the country, and they're trying to acquire Albertsons to get even bigger. Now, the federal government's blocking that acquisition or that merger, and it may not happen. If it doesn't happen, it's not the end of the world. If it does happen, I think it's good for both Albertsons and Kroger. Keep in mind, they have to compete against Walmart, who now sells groceries, Target, as well as Amazon. So I hope the government really looks at that and realizes that the grocery business is really run by very, very large companies. Overall, this is a good, sound consumer staple company. It should be a good stock to own during a recession, which is quite possible to have in the 2025 year. So it's good to have these guys in my portfolio. Should I buy more shares, just hold my shares, or even sell shares of Kroger? Well, I'll answer that question toward the tail end of this video and share with you what I plan to do with this stock. Kroger is a $39.8 billion company, not too big, and they have $150 billion of revenue. So it's a very, very high revenue company. They are nice and profitable and have been profitable for many years. They have a dividend of 2.32%, and they have a PE of 18. Not too bad. In today's environment, PEs are pretty high. Analysts really like the stock. They think it's discounted by about 5%. So I'll take a look at their opinions, which were mostly based around earnings per share. The company has seen its growth kind of slow down quite a bit. During the COVID years, they had more growth, and part of it was because we had inflation on food. So they're able to increase prices due to inflation. Inflation is now much lower. So growth is a little tougher for them to accomplish. They still grew their earnings. They were very well operated. The market really liked what they saw. They're a good cash generating company. They generated $2 billion of free cash flow in the trailing 12 months. I'll use the cash flow as the principal valuation method that I'll use on Kroger. Also use earnings per share, and that'll be an influence on the overall blended value that I calculate for this company. Speaking of which, there are 12 analysts that cover Kroger, and they believe it's about 5% discounted. They're using this year's earnings per share and next year's earnings per share as the data points that they're using. Their earnings did expand quite well in 2024. And in 25 and 26, there should be small growth in earnings per share. So I'll use this information to value the company. I value companies based on free cash flows, which really tell you a company's worth. If you look at the most valuable companies on the stock market, they all generate very high free cash. Warren Buffett is an investor in Kroger, and I'm sure he uses free cash to value Kroger. I'm also going to use earnings per share. Most of the weight of the valuation that I conclude with will be from free cash flows. I'm taking a conservative forecast for free cash flows, starting with $2.6 billion, and then growing that cash over the next 4 years by 7%. The reason it's conservative is this year, just year to date, they're already over $2 billion. So they should be able to meet that $2.6 billion number and probably exceed it. But I'll be conservative. The terminal value, which is all cash flows beyond year 4, will grow at 3%. And the discount rate for Kroger, they have a very good balance sheet, is going to be 8%. When I discount all these free cash flows to today's value, net present value, I get to $54 billion of value. I add cash and take away debt to get to an equity value of $46 billion for the company. The current market cap is $37 billion, so it provides a 15% discount on Kroger if we look at free cash flows. Earnings per share expanded quite a bit this year, so it's really raised the value if you use earnings per share. Using a PE of 16, which is reasonable, and a growth rate of just 2%, I get a 35% discount if I use earnings per share. When I blend the two and I put more weight in the free cash flow method, I get a 21% discount on a really good company. When I look at my investment in Kroger, the stock has appreciated 24% for me, and they have also paid a 2% dividend, over a 2% dividend. So it's been a good performer, and I like the defensive aspects of a food company. If we hit a recession, this stock should really hold its value. I'm sitting on a nice gain of Kroger, and all things are going well. I have an investment of $50,000 in the company, and my stock is worth $62,000 now. For now, I'm just going to hold my shares and not buy any more shares. If the stock were to come down in price, I'd probably buy more shares. But I've got a pretty solid position of Kroger, and I just want to keep it in my portfolio, collect that dividend, and that should be good. This is definitely a stock that's going to work at night for me while I sleep and continue to appreciate in value and pay me that dividend. So that's my video on Kroger. I hope you found it interesting, and I really appreciate you watching.